welcome Constance Choi, co-founder of Koala blockchain workshops. Constance has been working on a self-regulated entity called Data, and also she's working with top level research institutions like CERN, and she's working at MIT, and she's working on different research on how to use the blockchain on an academic level, and well, she will explain she can explain better her work, and it's really she travels a lot around the globe, and she has a very good understanding of what's going on in terms of regulatory issues and blockchain. So thank you, Constance, for being here today with us.
Thank you so much for having me. It's very exciting, actually, to be here. I was here for the first Latin American Bitcoin conference back in 2013, and we were joking around just earlier today about how that's generations in this technology. So thank you so much for inviting me here, and I also just wanted to thank Juan. He, when I was first entering into the space and learning about regulations, his blog was one of the first that I came across. And as a seasoned compliance executive in the space, he understood immediately what these issues were. And so I remember just being so inspired by his blog. So it's really exciting to walk this path with you. So we've heard a lot about just basics of the technology, what regulations might look like practically. I'm going to just, first a little bit walk through the evolution, like what the implications are of the technology, and then kind of take a 1,000-foot view so that we can walk away looking at what the future holds. So I think what's most important, as I was trying to figure out the title of this talk, we've really come a very long way since Satoshi's white paper came out in 2009. We are really moving towards, I think, a deeper understanding of the technology. And on a fundamental level, if there's one point that I want you guys to walk away from, it's that this is a tool. It's a very powerful tool, and it offers incredible opportunities for empowerment and access and growth and innovation. And it also is a very powerful tool for oversight as well. And I think that's something regulators and policymakers are now increasingly becoming aware of. So, this is a technology really for both innovation and proper oversight in the new information age. So I'm going to walk through a little bit of the currency applications, the technology, Bitcoin 2.0, smart contracts and DAOs. I'm going to go a little bit into what this means in light of the billions of devices and people who will be coming online in the next few years. And then, I'd like to talk a little bit about what might be best practices moving forward as we try to build the road and the car and the gas for all of these technologies moving forward. So I know you guys heard a little bit this morning about what it is. I think this is worth walking through. Bitcoin, its first use case was money, and I think a lot of people have understood it as a currency system. But I think if you really break it down, on one hand, it could be understood as a network. So it's like the internet, it's like PayPal. It's also a protocol. So just like the internet is a protocol, just like Skype works on a protocol, it operates as a technology protocol. And then finally, along this protocol and this network, you have these digitally native bits of data that we have assigned a value to. And that's what is acting like a currency. So at its essence, as a currency, it's a decentralized payment system and network. So it allows the secure transaction network. And then as a technology, the backbone is really blockchain. And Bitcoin is the first blockchain. And I'm going to go a little bit into how different blockchains have now emerged. But at its essence, it's a distributed ledger that's verifiable on the internet without any central authority. It's transparent, it's real time, and most importantly, it's append only. That means you can write to it, but you can't change it. You can't alter the record. So these are cryptographically secure, uncounterfeitable, and these entries on this distributed database can really, as we're finding out, represent anything, not just money. So blockchain and its emergence is really a part of the evolution of our social architecture and our technology architectures. So we've moved from centralized, decentralized, and now distributed architectures, which are the underpinning of our social communication, our financial communications. And what you're really seeing because of this architecture is an entirely new ecology of products and services. So you've moved from the old telecommunication channels, cable wires, to using Skype to being able to call anyone over the internet. You've moved from hotels and cabs to Uber and Airbnb. Communication has moved from having a mailbox and a central postmaster that delivers mail to each place to being able to send mail to anyone in the world. And for information, it's freed up little silos of information so that with one click, anyone in the world can access the entire world's knowledge. So what this actually means is more than just the new products and services that are coming out. It means that we're having an entirely new economy that's based on information. So instead of things just having an asset value or an exchange value, things have suddenly have something called information value. And we found it very, very hard in our current economy to measure what that value is. So, one example that I use is the WhatsApp sale. It went for, I think, $19 billion. And, it's a messaging platform. It doesn't have any infrastructure. It's really just a piece of software. And somehow we decided as a world that it was worth $19 billion. So that means there's something outmoded, there's something out of date about the tools that we use to measure how value is actually being created. And that also means that, that we need to create new tools of being able to measure how value is being created in the information economy. So, if you look at, there's an excellent article actually in The Guardian that talks about this new economy that's emerging and the need for us as a society to really capture that market and really be able to engage in that market in a meaningful way. So if you look at, for example, like a business flight that's flying across the ocean. Yes, it's a machine, it's a plane. But actually, if you look around on that plane, everyone's on their laptops. They're working, they're transmitting, they're creating. And so actually, that plane is more than just a piece of machinery that's transporting bodies. It's actually an information factory. It's actually moving information and people and processes. So there's something that we're not counting yet that's actually creating value in the world. And that means we need to create new tools of being able to find out how to create value in a new information economy. So in its essence, as we look at these new technologies, we need to move away from just looking at what its asset or exchange value is, but what its usefulness is. And that's really important for these nascent technologies, where we're really at the tip of the iceberg, where we really haven't figured out exactly what its implications are and how it will be used. And the internet is a great example of that. So central banks and some of the heads of governments have now really started engaging with this technology in a meaningful way. When I first got into Bitcoin and blockchain in 2011, and this is when it was still very, very new, I was happened to be the first general counsel and chief compliance officer in the ecosystem. So that meant, because of the popular conceptions and what you heard about in the news and what regulators heard about, were really just Silk Road, is this being used for drugs, being used for porn? I had the job in being a co-founder of this exchange and having to travel around the world talking to regulators and policymakers and financial institutions to explain really what this technology was, to demystify it from all the noise you were hearing, and to really explain the architecture where the real risk and the real opportunities were. So it's actually very gratifying to see now here in 2015, this amazing group of people, people from all over the world, all these experiments that are going on in the technology, that people are really understanding that this is a very powerful tool, an evolution, just like the internet. So you have the Federal Reserve, for example, is working right now on blockchain to facilitate better payments. You have the Bank of England that really, I think, encountered, has really figured out that the distributed ledger is a significant innovation that allows people to hold digital records securely without any central authority, that allows records to be kept with resilience, that if one server goes down, that record is immutable, you still have it. The Federal Reserve of Boston has also put out a study in which they recognize that this really, actually, apart from Bitcoin as a currency, that the architecture itself could be a very powerful network of information and value exchange. And so, as we, I think it's worth remembering, just because Bitcoin in its first use was as a currency, that architecture itself is very powerful and presents a lot of uses that we're just really beginning to touch. So actually in the Bank of England report, they pulled a very good example of electricity. So actually when electricity was first emerged, it took about 30 years for the world to feel the economic impact of electricity. And that's not because the technology wasn't there, it's that we couldn't figure out how the architecture of our factories should be moved because we were moving from steam power and coal power to electricity. So it's really not just the technology, but how we use it, how we organize around it, how we understand how it's applied. So, again, we know about Bitcoin as a currency. We know that it's a network. But what it really allows is secure value transfers using tokenization of data. So those tokens, the numbers, the data that runs along these blockchain protocols, they can really represent anything in the world. So if you can think about everything we use as a database, as a ledger, as record keeping, it runs the gamut from financial applications, currency, derivatives, commodities, mortgages, to public records like land titles, passports, certifications. You have private records, so escrows, wills, and trusts. All of these things can be held now securely, digitally, immutably. And we're now experimenting with things like physical asset keys. You can use blockchains to be able to actually enable selective access and secure access to your car, to your house, weapons unlock, safety deposit boxes. It really goes on and on. Now, this is my organization, Koala, which is a coalition among academic institutions. I'm going to go a little bit more about this into this a little bit later. We have working groups that are working on financial applications, that are working on smart contracts and investigating how identity and privacy might be changed with this technology. So this working group, of which Juan is a part, has come up with a glossary of terms, because what we're really seeing is an emergence of new business models that are very, very different than the ones that our laws and our regulations anticipated. So things like control, for example, that has to be redefined. Now I'm just going to briefly walk through this. Feel free to come up and ask questions afterwards. But this is just to give you guys a sense of how these business models are really changing our risk metrics. So if we try to regulate based on an old architecture, we're really going to get it wrong. So, even among things like wallet systems, you have a variety of risk and technology backbone that really changes the way we should regulate it. So you have things like a hosted wallet, which is where a company provides a software mechanism, they run the private key on their server, they manage all of that. So they actually hold the private key that unlocks those funds. So in the traditional sense, it might be considered that they're the custodian. But you also have things like hybrid wallets or non-hosted wallets, where a company is merely providing the software, the JavaScript application that allows you to manage your key, but that key is only run locally on your server. So that means at all times, the user is holding their own key to their box. The company is never holding that key. So a company that holds the actual money, the control of the money, and a company that really provides software for you to access your own money, just like you access your own internet, your own email, very, very different risk metrics. And then there are a whole proliferation of other business models that are emerging. So things like multi-signature. So that could require maybe 2 out of 3 keys to release funds, which which provides a lot of opportunities for control and transparency and corporate governance, and really leaves not one person holding custody of those funds. So that also presents a very different risk metric than other models. So, and these are just really the tip of the iceberg as well in different business models that are emerging. We're really just beginning to see what this technology can do. So it really, I think, underscores the importance of needing to be very thoughtful about regulation, because we don't actually know how it's going to work in the future. So with all of this new technological innovation, with a lot of the learning gap that has to happen from business, from industry, from regulators, what has happened? So you have companies that are trying to offer products in the space. They want to offer it in a safe and secure way. I mean, if not for following the letter of the law, it's to provide good service to their consumers and protect themselves against fraud and hacks. So what's happened actually, and I've personally seen this evolution as someone who was a part of an exchange very early on in the space, is that we ourselves, the businesses themselves had to try to understand the law and try to figure out how, with this new architecture, how they could actually fulfill the spirit of the law. So you've seen things like voluntary AML compliance, even though people aren't sure whether they fall under certain money transmission or Bank Secrecy Act regulations. You've seen people using the very public ledger of Bitcoin as a way of being able to track transactions and the source of funds. There's an ability now with blockchain, because there's a public ledger of where all those funds are kept. That means a user themselves could go online and make sure and see and check, verify that a company actually holds the funds that they claim they hold. So there's a really an evolution in being able to provide transparency and control back to the user. Let's see. So moving a little bit beyond blockchain just as a value transfer network. So what can we do? There's something called smart contracts, and you guys might have heard a little bit about that this morning. So a smart contract is a process that's written in code, that's technologically enforced automatically, where the preset rules and conditions can be automatically executed without an intermediary. So what does that mean? What that means is, in a real world example, for example, when you buy a house, you have to put in they have to get the mortgage payment, their actual payment, and then the title needs to be transferred once that payment has been made. With a smart contract, you could enter into a programmed contract in which the funds, once they hit the account, the title could automatically transfer. And one could not happen without the other. And it would require nothing except a line written in code. So if you can imagine a blockchain network in which you had funds transfers, and on that same network you also had land title registration, you could create a contract in code in which you don't need to worry about whether, about counterparty risk, whether one party is going to meet their obligation, whether once they sign the contract, they'll actually do what the contract says they will do. So it has a wide-ranging applications. So smart contracts can be used for digital securities. You could have, real-time payroll, tax collection. You can transmit computable property. You can share property in a transparent and secure way. Escrow services could be automated. Crowdfunding can be automated as well. So you could fund a project and you could have a smart contract that says once certain milestones of that project are met, let's say you actually create a proof of concept. Let's say you go to market. Then those allocations, the funds, can be released back to the investors automatically. You wouldn't have to rely on someone to actually fulfill their promise. And so what you're really seeing now with these ledgers and with these networks that allow these secure value transfers, you're seeing this new evolution of asset classes. So, and this is where the law really is struggles, because the law is built on precedent and it's built on what we know. It's built by analogy. And historically, we've had some very narrow definitions of asset classes. We have money, we have currency, financial instruments. And blockchain, because it can tokenize anything, because that data can really represent anything, it really defies all of these boxes and borders, and it really is a struggle for policymakers and lawmakers. So the question is, this is something I think we should all query, and this is something the internet has also struggled with, is it's a global technology. And as a global technology, it transcends national borders, and laws are national, they're sovereign. So as we enter into an information age where we communicate, we transact, we interact across borders, what kind of rules, what kind of transnational global rules should really govern these technologies? So I'm going to go a little bit into financial market applications. I'm sure some of you guys have heard some of this before, but what this really means is that this is a network in which you can have debit, credit, and settlement all happening all at once in real time. So what this means is you can also have, because this is a distributed network, you can actually have one computer running the ledger, which is validated by many decentralized nodes, and you wouldn't need huge server farms which reconcile the databases and records. So within your own institutions, and this is something, as I've talked to banks and financial institutions, it's a huge issue of being able to maintain the security of records, even AML records, between different departments, your payment networks, your loan departments, your derivatives and securities groups. Being able to maintain the integrity of that ledger and that database is a huge issue. And with blockchain, you can synthesize that into one distributed database. So what it'll really mean is we won't have to have so much physical infrastructure. We won't have to upgrade our servers every single year. You can have coordination among different business units that take very little back office and front office coordination. You can have real-time settlement. That means an increase in working capital. That means there's no float. You can use the money immediately. And what this also offers for regulators is real-time auditing. So with this technology, you can have, because it's so transparent, you can show an auditor can have real-time access and real-time verifiability that something is happening the way it should in the technology. So given the wide application of this technology, the investments in the space are on track to exceed $1 billion for this year. So last year, I think they had said that the investments in the space already exceeded the investments of the internet in the early 90s. We're now way, way beyond that point. And so, not surprisingly, you're seeing this year, starting last year, this year, major financial institutions and governments and policymakers now experimenting with blockchain. So this is just a smattering of examples. There's only limited space on the slide, so there's many, many more here. But RBS and CBA have already started a trial with a different consensus protocol, Ripple, which is another blockchain. The Monetary Authority of Singapore has invested in a blockchain-based record-keeping system. I think it's part of their $225 million fintech project. Barclays has now entered into a proof of concept partnership with Cefello to enable blockchain-based payments. You have the Estonian bank, LHV, now experimenting with colored coins, in which that token that runs on the network can represent other assets. There's a number of, Ernst & Young, PwC, HSBC, they've all set up innovation labs and blockchain initiatives to figure out how to leverage these technologies. Actually, I just put on a conference in London, blockchain workshops, where we had the lead at Ernst & Young who's working on their blockchain initiative. And one of the questions I asked him I was the moderator for the panel, I asked him how many companies would be experimenting with this, in his view, would be experimenting with this technology by the end of the year. And his answer was, every single one, and they already are. SWIFT, the SWIFT network, has just issued an innovation challenge to be able to investigate how blockchain can be used for payments. And it goes on and on. The New York Stock Exchange has invested in a blockchain company. You're seeing technology giants like IBM and Samsung now entering the fray. So where does that leave banks and traditional banks? Well, the answer is we don't know yet. But we do know that what this really offers is a technologically open system that's interoperable. You know, I've heard the groans and moans and the pains of people who are working at these large institutions that need to upgrade their systems every year, that it's not just about how long it takes to move from bank to bank, but that their physical infrastructure itself is lacking, is slow. You're going to have entirely new layers of financial services because people can build on top of this technology. And you're going to have a reduction of infrastructure and also increased resiliency. You're going to be able to rely on the data. But that still means that the banks can still play a huge role in being the center point of being able to initiate transactions, being able to set rules and regulations, being able to extend credit. The future is unknown, but everyone can adapt. So obviously, this technology is paradigm shifting, which means a lot of things will change. But what it also offers, and this is, I think, if you look at my previous slide of all the experiments that are going on in the technology, something that major financial institutions are becoming aware of, there's an early mover opportunity. This technology moves so quickly, and there's a lot to learn, and there's a lot to experiment with. So the people who really start these small-scale experiments now, figure out how this can actually increase their profits, lower their costs, provide new products and services, are really going to have, I think, a head start in the technology. So now we're going to move into, I think, a little bit of a science fiction territory. And it sounds like science fiction, but actually, just yesterday, Ethereum launched their Genesis block. So I don't know how many of you guys know about Ethereum, but it is basically a next generation blockchain operating system. It's a platform that's going to enable anyone to build smart contracts that can do all of those things that we've discussed a little bit earlier. So they just launched yesterday. They've started their mining network. It's a grand experiment, and I'm really excited to see what kind of applications are going to be built on top of it, what kind of scaling solutions they're going to come up with. It's a really incredible group of people. It's very experimental technology, but it's really pushing the boundaries of what we can do with this technology. So I started out with the genesis of DAOs for this section. So DAO stands for Distributed Autonomous Organizations. So I think the best way to understand this is these are very complex smart contracts. So we talked a little bit about smart contracts that allow for social and economic coordination based on the technologies. So, this got cut off a little bit. So it allows for this coordination through a formal governance procedures that are embedded in the smart contracts that are automatically executed. So what can we do with DAOs? So when I say DAOs, it says distributed autonomous organizations. That can mean distributed autonomous corporations. It could be distributed autonomous nonprofits, NGOs, communities. It could mean a whole host of things. But what it really means is it's an infrastructure where any community, any group of people, any company can have this very transparent and automated governance system. And you can change the rules. I mean, all the people can agree to change the rules, but that means they're all rules that everyone can see and agree on and make sure that they're followed. So, for example, you can create a corporation in which there's a dividend procedure that's embedded in the smart contracts that runs the organization. And that means it could issue stock shares, options, dividends, assets, permissions automatically based on certain conditions occurring. So this is also open source, so that means no one can go in and change the code and game the system. It also means that it's transparent, which means a CEO would be answerable to their shareholders. It allows for these kinds of decisions and economic contributions to be distributed and managed transparently and securely. So if we really look at, so we have bitcoins and blockchains, smart contracts that are organized into these governance procedures we call DAOs. What we're really looking at, as we look at this new information age, as we're seeing how the internet is pushing the boundaries of our coordination, We're looking at a movement towards open source, resiliency, and decentralization. We're going to start having seamless liquidity across assets, management of billions of devices, and what you're also going to see is this increase in what I call the governance gap. That means there's an acceleration with these technologies of the users to be able to do things with their own hands in their own homes in much more powerful ways than ever before. They can set up their own bank account in their own home. And then you're also seeing an increased complexity in the technology and the architecture, which is very difficult for policymakers to understand. So how to bridge that gap so that we have both innovation and proper controls and oversight is going to be very important. So I'm just going to briefly go through the Internet of Things. We're running a little bit out of time. This is just to signal why it's so important we get it right. So the Internet of Things, we have a lot of buzzwords about it, but what it really means is smart machine-to-machine interactions, devices, things, processes being connected, so ubiquitous connectivity, and then because everything is connected and data is being collected, a networked intelligence. So IBM has just partnered with Samsung and Ethereum to do a proof of concept on the Internet of Things. So they use Telehash, a messaging system, Ethereum's blockchain system, and Samsung's devices to actually prove and build a proof of concept on a washing machine that could sense when it was out of washing detergent, communicate to a detergent provider, pay for it, and actually have it delivered to their home and installed. So this is just a little taste of where the future is going. And you're seeing increasing technology partnerships to be able to do this. So why do we care? Why do we care that a machine can do this thing in a garage and order its own dishwasher? Well, if we just look 5 years ahead, 10 years ahead, right now we have 3.1 billion people connected. Now we're going to have billions of people from all over the world, Africa, elsewhere, that are going to be coming online. And there are certain estimates, I think 15 to 19 trillion of the economy that's now going to be built on the Internet of Things. Now, if you remember from the very beginning, I said there's a new information value that's being created. It's not just asset and exchange value. It's the usefulness and the information that's embedded in a particular asset. So this is just a signal of where that information economy, that usefulness economy is going to be going. Here are just some metrics of how many devices are going to be connected, how many bits of data will be connected, how many devices will be connected to the billions of people that are now connected. And what this means is our current architecture that manages these connections and this data and negotiates all of the relationships, it has to be completely revamped because that architecture can't handle this many billions of connections. So by necessity, we have to evolve that architecture. And what this means, I think, particularly for Brazil, Brazil has been a leader in smart cities initiatives. You guys have garnered awards all over the world for leading. You guys have a very, very powerful economic base, a connected world, and I think, and also a thought leadership in the way the internet is moving forward and changing our actual physical architecture. So what smart cities really means is using this Internet of Things and automation. You're going to see public services being increased, so intelligent traffic lights that light up when people are there, when it's needed, and that turn off when they're not needed. Real-time traffic routing and monitoring so that cars aren't lagging in traffic so much. We're not wasting CO2. You're going to see a reduction of waste, so electricity, garbage, are all going to be able to manage on a real-time basis. Even things like, so if you go, let's see. So this is the Rio Operations Center that in anticipation of the World Cup, they set up their first smart cities data management. So this is where they consolidated 30 municipal departments into one space to allow for real-time management of weather patterns, traffic patterns that were accessible to users. Now, this is a little bit scary because and I think the Rio Center came under fire for doing this in a very centralized way because you're collecting a lot of data about a lot of people, and collecting that in one place with one oversight body can be quite dangerous. So if we look at, this is on one small scale here in 2014, if we look at where we're going to be going in 2016, we're actually expecting the devices in our hands in the world to double. Right now, we have 1,000 gigabytes of data per person in the world. And so you can imagine if that's going to double in 2 years, that data is going to be very powerful. It's going to be hard to manage. It's going to create a very personal picture of who you are. And so it's actually very important that as we move forward, we understand what this implication means for our personal liberties and our surveillance and the issues of national security, surveillance, and also privacy and civil liberties. So blockchain is very transparent, and that's its power. But what that transparency means is that it allows a very, very powerful view into of your records for all time. So when a business is hacked today, that harm is confined to what's held on that server. With blockchain, with smart contracts, with the Internet of Things, being able to have a record of all your data for all time, that means if that data is compromised, if your identity is de-anonymized, not just by legitimate governments for legitimate purposes, but also illicit governments and illicit actors, that means your entire history, your world, your life, who you are, what you do would be exposed. So the need to be able to protect our privacy and our data in the new world, it's essential. So a lot of people say, oh, privacy is dead, we've given it up already. But and this is something actually that I don't need to explain very much in places like Germany and elsewhere, but people behave differently when they're being watched all the time. We close our bathroom doors, not because we're doing anything bad in the bathroom. It's just there's certain zones in our lives that are private, that aren't for public consumption, for someone to analyze and judge. So that is really the essence of democracy. So if we go into a total surveillance, total this acquiescence to being watched all the time, people will behave very differently. They'd be less inclined to dissent. They'll self-censor, and that is really, I think, will be crippling to democracy and to our civil society. So this is just something, the need to be able to preserve our personal lives online, to be able to protect our personal data, I think is really it's a human rights issue. It's a democratic issue. So one thing I want to say is Brazil has been an incredible leader in internet governance. They pioneered the first Bill of Rights that was signed into law last year. It was a very innovative process that involved multi-stakeholders from governments, from academia, from business, from civil society. It took many years, but what happened was the outcome was credible. It was globally respected. It provided a democratic process to be able to come up with clear rules for a very, very complex technology. And so there's lessons to be learned here. We need multi-stakeholders to understand this. In Marco Civil, there was a recognition that not one person or body could really come up with the right answer. And that was a really powerful lesson. For example, the governments need to tell us where the privacy and the systemic risk, where the risks are. Markets need to tell us what they can and can't do, what's hard, what would prevent them from offering products in the market. We need to be able to know what's technologically capable. Users need to talk about civil liberties. And so Marco Civil can actually be a very powerful model for how we can approach blockchain technologies. And I think for particular Brazil, there's a huge opportunity to become a leader because this is something that's being addressed at the very highest levels. So in terms of best practices, I know Juan has gone much more into detail on what the practical applications might be, but really it's about education and dialogue. We don't know yet. But if we act like we know, we're going to get the answer wrong. And other countries are experimenting. So it's going to be a race to the top and not to the bottom. In the meantime, there are some incredibly important protections that we have to have, AML, CTF, consumer protection. So we need some light regulation. So the idea is to just do the basics right now of what we know and really educate, engage, experiment, and figure out where we need to go in the future. The lessons from the internet on policymaking, I think, are really key here. The multi-stakeholder approach is very important. If we rush to regulate, we're going to stifle what this technology can do. like the internet, this is built up both by governance and non-governance. And this is a whole bee's nest of issues around global sovereignty and national sovereignty. So I think the best practices moving forward for policymakers: understand the technology, appreciate that this is an opportunity for oversight as much as it is for innovation. Focus on the actual activities and the business models, not on the underlying technology. Recognize that there's new ways of technologically enforcing rules and eliminating risks. Be thoughtful and cautious. And that today's technologies raise these issues, and tomorrow's technologies will raise other issues. So let's be thoughtful, let's do it right, let's do it together. To that end, this is a group that has been organically formed. It's a global group. We're now working with a number of academic research universities that are trying to be very thoughtful and thorough and holistic and have fact-based policies. We now have, as part of our coalition, the Deutsche Bundesbank, the Central Bank of Germany, the EU Commission, Bank of England. Koala is now the international body, the Dynamic Coalition on Blockchain, which is under the IGF, which is the UN body for internet governance. And we're also the working group on crypto equity at the W3 Technical Standards Development. And what this all means is, this really takes all of us working together, all of these different sectors. The technology is incredibly powerful. It can be a means of empowerment, innovation, and growth. And it's going to be very exciting to see what happens. Actually, the IGF is having their global meeting in Brazil, November 10th through 13th. This is the entire global internet governance around the world descending here in Brazil to discuss how to move forward with these technologies. I think there's a huge opportunity in South America, Brazil, to be able to lead, just like it did in the internet, on blockchain technologies. It's really going to change a lot of things, and it's going to be very exciting to see where it goes. So thank you very much.